Morning, everyone. So I think we can proceed with the event, and any other colleagues that would like to join can join us as we progress. My name is Nwanda Masego. I am a senior economist from TIPS, and today we will be presenting our quarterly reports that we do for the DTIC, and that includes the Real Economy Bulletin, the foreign direct investment tracker, the import tracker, as well as the import localization study, which is now a biannual report. And so we will be reporting for the first half of 2023. Without wasting any time, I think we can go ahead with the presentations. I would like to start with the REB presentation. And then after that presentation, we will open for one or two questions that are urgent. And after that, we will move to the next presentation. Any other discussions we can have at the end of all of the presentations, just so that we make enough space for everyone to present. Thank you. Who is presenting the REB? Is it you, Seutame, or Michael?
It's me.
Thanks, Seutame. So you can go ahead and present. Please share your screen from your side.
Just to start off with, I think, my name is Seutame Maimele. I'm an economist at TIPS. So I'll be presenting the Real Economy Bulletin. So I'm hoping that my presentation is not going to be that long. And also after the presentation, as Knox has already highlighted, then if you have some questions regarding the Real Economic Bulletin, then you can just post them. So for those who are not familiar with the Real Economic Bulletin, so the Real Economic Bulletin is a quarterly review of trends, developments, and data in the South African economy that TIPS does on a quarterly basis. And it includes a comprehensive analysis of main manufacturing industry and key associated data. And in this presentation, some of those trends that are analyzed include GDP, infrastructure, employment, trade, investment, and profitability, FDI, as well as two briefing notes. So one briefing note was focusing more on women's economic access and the limitations of industrial policy, men in hard hats. And that briefing note was written by Nwanda Masego. Then the second one is a briefing note on SMMEs in the just transition, written by Elise Harting and Michael Hector. So I'll be just also, taking through some of those briefing notes, but they are available on the Real Economic Bulletin, on the TIPS website that's published. So if you have some time and you want to know more about, what's written in those policy briefs, then you can just go in detail and read them in there. So to start off with, so we in the second quarter of 2024, we've seen GDP increasing by 0.4%, and that increase is actually lower than the expansion of population of around 1.3%. So the economy is growing slower than the expansion of the population in the South African case. And in the second quarter, we've seen that virtually all of the growth to the year, in the second quarter has actually took place in the private or professional services, which previously have led the growth from COVID-19 pandemics. And we've seen these sectors or services, including engineering, software production, cultural work and the law, cleaning and security, as well as personal services such as hairdressing. So most of those, and I think in the later part of the presentation, you will also see how, for example, these have, in these sectors have, created jobs in the second quarter. So moving into the manufacturing again, so the manufacturing sales in constant terms have, been essentially flat since early 2023, while output in volume terms have barely increased since early 2021. And the most obvious factor slowing manufacturing growth remains, infrastructural challenges. And I think in the next few slides, you also see where, I expand on some of these issues, which have, contributed to the lack of performance of the South African economy. But overall, you see that the sector has shrunk over the year, but also saw some recovery in the second quarter of 2024. Then drilling down into the manufacturing subsectors, so we see that most of heavy industries saw modest growth in the past quarter, but have shrunk year on year, as highlighted in the last slide. And only transport equipment and petroleum and petrochemicals expanded their sales significantly, while most other manufacturing industries shrank. Again, petroleum metals and clothing and textile are producing at well, below pre-pandemic levels, but most other industries have actually caught up, as you can see from the graph. Then just highlighting some of the factors. So there are three key factors have been highlighted in the second quarter that have been, affecting performance of the South African economy. So one is that there has been a decrease of main mineral export prices, and from the graph, as you can see, is that prices of, main mineral exports have actually fallen significantly since their speculative peak following Russia's 2022's invasion of Ukraine. Of course, you see chrome and gold have actually not been affected in that case there. And the other one is that there's a deepening fiscal austerity and rising real interest rates. Of course, I think there has been some few adjustment, especially in terms of real the interest rates, which I think we've seen last few months or so, where they've adjusted that. But since this presentation is focusing more on the second quarter, so during that time, I think again, so the interest rate has actually also been high. Both the fiscal austerity and interest rates have been dampening domestic demand. So looking specifically in the fiscal austerity side of things, you see that from the 2024-2025 budget is actually imposing cuts in real terms to public services, including education and healthcare. And in terms of interest rates, as I've highlighted, so they have been, relatively higher than the CPI at any time in the past decade, which, is affecting domestic demand. Then the last issue is regarding the infrastructural issues. Of course, again, here we've seen in the last few months or so that since we haven't had load shedding for some time, so while there has been some positive developments, especially in the Eskom side of things, we've seen Transnet rail and ports declining further. And again, other issues is with regards to tariffs. So tariffs at both Eskom or electricity and rail tariffs have actually increased faster than headline inflation, which are also other issues contributing to the performance of the poor performance of the South African economy. Then moving into employment by type of employment. So we've seen in the second quarter of 2024, over 300,000 jobs were actually added, almost 2% faster than the reported GDP growth. And this translated to around 16.7 million people employed in the country, lighting above, pandemic levels. Then the informal sector saw the most rapid growth, expanding by 3.3% compared to just 1.2% for the formal sector. And another, issue is that, the share of adults with paid employment actually in South Africa stabilized at 40%. But still, this is still below the pre-pandemic, figures and far lower than the global norm of 60%. And, the breakdown again, here you see that the formal sector have added 140,000 jobs, informal sector around 100,000 jobs. Then domestic work added 67,000 jobs, and agriculture has actually remained unchanged. Then moving into employment by sectors, again, so manufacturing added almost 100,000 jobs, while construction lost the same in that period in the second quarter of 2024. And together, the manufacturing and construction sector employed approximately, there are 100,000 fewer people than before the pandemic. And in contrast, the rest of the economy made up mostly of private, again, just linking it back to the drivers of growth in the South African case again. So you see that most of private and personal services, retail, logistics, and social services have actually gained 20,000 jobs, or 2.6% in the year to the second quarter of 2024. Then just drilling down into manufacturing subsectors. So within the manufacturing sector, we see food processing accounting for 2/3 of jobs gains in the year to the second quarter of 2024. And again, clothing and textile also made up most of the rest. But in contrast, metals and metal products saw significant net job losses. And employment and machinery and equipment also shrank, in that period. And employment in mostly heavy industries remains below pre-pandemic levels, but clothing and food processing have more than recovered from the lockdown in the second quarter of 2020. Then moving into international trade, so South Africa's goods trade surplus climbed from 11 billion rand in the first quarter of 2024 to 53 billion rand in the second quarter, and that continued, an almost unbroken string of surpluses since the 2020 pandemic. But we've seen that in this quarter, actually, the trade surplus has slightly increased, as you can see from the graph, and mostly because of slow economic growth and some of the other issues that I've mentioned, in the last slides. But generally, what we see is that both goods exports and imports were lower than a year earlier, though exports ticked up compared to the previous quarter. Then just drilling down into international trade again, so looking specifically at exports separately and imports separately. So you see in terms of exports here, year on year, they've declined, but they rose, our current quarter from, by 44 billion rand to 519 billion rand. And mining exports value was 25% of their peak, of their 2021 peak in the second quarter of 2022, mostly due to lower world prices. Again, you see some of these issues that I've mentioned, coming out in the presentation again here. Then in terms of manufacturing, exports increased by around 14 billion rand, 16% during the same period, although they declined in the year to the second quarter. Then agricultural exports, which are comparatively small, as you can see from the graph, have dropped by 9%, or around 4 billion rand from their 2023 peak of 43 billion rand. Then in terms of imports, again, so you see the similar trend there again. Imports have declined year on year, but they've actually increased current quarter by 1 billion rand to 465 billion rand. And next, looking specifically in the extractive space, mostly South Africa imports petroleum, but that actually fell by 4 billion rand, or 4%, to 103 billion rand, and this followed the sharp drop in 2023, mostly because of falling world prices again. And in the second quarter of 2024, oil prices in US dollar terms remained substantially higher than in the late 2010s, although they declined in July and August. And year on year, manufacturing imports in the second quarter of 2024 contracted by 63 billion rand, or 16% in constant terms, falling to 344 billion rand. And again, so you see agriculture imports were also essentially unchanged in this case. Then moving to investment. So over the year to the second quarter of 2024, the investment rate fell to 14.6%, down from its post-pandemic peak of 15.3%, and well below pre-pandemic levels. Both government and private investment shrank sharply over the year. And for the year, both private and general government investment shrank 7% in constant rand terms, while investment by state-owned companies fell 1%. Then Still on investment, so looking specifically on the gross fixed capital formation. So in the second quarter, we've seen that it was 6% lower than a year earlier and 1% down, on the first quarter. And available evidence underscores that the difficulty of maintaining public investment in the context of fiscal and monetary austerity. Again, you see, some of the other issues that I've highlighted affecting the performance of the South African economy coming out in the presentation again. So, yeah, but generally here is that what you see is that the issues are actually affecting almost most of the economic indicators here. Then again, just reflecting on the investment here, you see that the structure of capital investment reflects these constraints again. So in terms of profitability, so I think the main thing that I can just highlight here is that you see that the manufacturing profits have actually dropped, whereas mining have actually increased, as you can see from the graph. Yeah. Then just highlighting on the FDI project, so we TIPS has a FDI tracker, and from the tracker, 11 projects were added across 4 industries in electricity, services, manufacturing, and mining. And the sum, as much as I think most of the investments announced that they didn't highlight the investment, they were a total of 8.1 billion rand investment value reported for the second quarter. Then just moving to the last slide is that just highlighting on the briefing notes. So the other one again, so it was highlighting is on women's economic access and the limitations of industrial policy. And the call, the brief calls for an improvement in women's participation in industrial policy and the economy more broadly, and requires, it highlights that for that, concrete actions needs to be taken. And some of those is to, for example, improve access to social services, especially in education, healthcare, and family care. And also, start addressing resource and spatial inequalities, especially where Black women are based in townships or rural economies. And it also calls for collaborative action across stakeholders in the state. And lastly, highlight, calls for investing in industries where women participate in large numbers, such as in, sectors that support industrial policy, for example, in education. Then the last one is on SMMEs in the just transition. And this brief calls for shifts, policy shifts to create a supportive green economy ecosystem that fosters the development of marginalized SMMEs. And also calls for promoting fair trade and inclusive participation in low carbon economy for SMMEs. So I think I'll just stop there. I'm sorry that I've just passed my time there, but yeah, if there are any questions there, then you can just ask. Thanks.
Thanks for that presentation, Seutame. Colleagues, I will allow for one clarity-seeking question. Please make it a quick one. Please raise your hand if you've got a question. Otherwise, we can move on to the next presentation.
Good morning. I'm trying to locate the hand app, but I'm not finding it.
Okay.
Just a quick one. It is a clarity-seeking one. Thanks, Nogwanda.
Okay.
On the electricity slide, I could not see the slide number. I just want to know the private electricity contributions. Is that from IPPs? I take it, and what percentage of the total electricity output would that be? Thanks.
You can go ahead, Seutame, and answer that.
Yeah, so the private generation is mostly from the IPPs, yes. So I'm busy checking the second part of your question here. Maybe I'll just type it into the chat. But for clarity, I think most of it comes from the IPPs. So.
Thanks, Seutame. Okay, let's move on to the next presentation. Our next speaker is Lucas Mthembu, who's going to be presenting the import tracker. Colleagues who are presenting, you've got at the most 10 minutes, and then we can use about 2 minutes for the clarity-seeking questions. Go ahead, Lucas.
Good day, colleagues. My name is Lucas Mthembu, an economist at TIPS, and I'll be presenting the import tracker for the second quarter of 2024. Okay, so the import tracker analyzes major import patterns, and it highlights searches or changes within import patterns. So the content of my presentation will start with the background. We'll go to the composition of the top 5 by rand value. We'll look at continental trade. We'll look at decline in imports. We'll look at the top 100 by rand value. Our first finding will be ongoing monitoring of previously identified searches. We'll look at polyethylene, we'll look at maize, and then we'll look at trade and fertilizer products. And then we'll conclude with a trade analysis on cement. Okay, so looking at the trade balance, the trade surplus was 54 billion from a 9 billion deficit in the previous quarter. Exports are down by 21 billion year on year, which amounted to 519 billion. Exports to China amounted to 51 billion, which was a 10% of total exports. Exports to Mozambique declined by 31 billion, which were largely for re-exports. Imports continued to grow since reaching pandemic-driven low of 304,000 billion in the second quarter of 2020. In the second quarter of 2022, these amounted to 465 billion from a 531 billion in the second quarter of 2023. Imports from China amounted to 94 billion, which was a 20% share of total imports. This was a 22% decline year on year. And about 13 billion decline was owed to lithium iron accumulators imports. Imports from the US, Germany, and the UAE, as well as India, declined. The decline in imports from the US was owed to a drop in auto and aircraft imports. So looking at the top 5 import items amounted to 106 billion, which was up by 1.2% quarter on quarter. Diesel imports declined by 8% to 37 billion, which is about 237 million liters, the decline in quantity. Petrol imports declined by 6% to 14 billion. Auto components for major cars imports surged by 15 billion, surged about 15% to about 20 billion. Crude oil imports also surged by 9% to over 20 billion. Components for goods imports surged by 8% to over 14 billion. Okay, so looking at continental trade, it monitors South Africa's trade balance with the rest of the continent. The analysis begins in 2018 because of how SARS recorded cycle trade data. South Africa is a net exporter to the rest of the continent. Exports amounted to 141 billion compared to 45 billion for imports. Export plateaued at about 140 billion after recovery from the pandemic downturn. Imports from the continent surged by 7% year on year, while exports grew by 0.3%. Imports from the continent are dominated by mineral products, especially crude oil, which mainly originates from Nigeria. Exports to the rest of the continent are also dominated by mineral products, which includes coal, petrol, diesel, as well as machinery. Okay, so look at the top 10 African countries which South Africa imports goods from. The top 10 forms 9% of the total imports and about 89% continentally. Nigeria is the top import source. As I've alluded, it mainly exports, South Africa mainly imports crude oil from Nigeria, which surged by about 1 billion from the previous year to 11 billion in the second quarter of 2022. Eswatini is the second largest source of imports. It mainly supplies sugar products. These amounted to 42% share of total import from Eswatini to South Africa. Imports from Ghana, Cote d'Ivoire, and Cote d'Ivoire surged in the second quarter of 2024 because of crude oil imports. Looking at the top 10 African countries which South Africa export goods to. Exports to the rest of the continent accounted to 27% of total exports in the second quarter. Besides Mozambique, the top export destinations were Botswana, Zimbabwe, as well as Namibia. Okay. look at the decline in, look at the decline in imports. So look at the decline in imports in quantities. As you can see, as I've highlighted here, there was a large decline in petroleum fuels. This included liquefied propane as well as petroleum coke. This is, if we move on to the next slide by rand value, you can see it's in line with an increase in crude oil imports and local refining, with crude oil mainly coming from Nigeria with the 1 billion surge as I've highlighted previously. So look at the first finding, which is ongoing monitoring of previously identified surges. Cement clinkers had a slight increase year on year, with imports increasing by 6%. Gypsum had a significant increase year on year, with imports increasing by 40 billion to 130 million kilograms in the year to the second quarter of 2022. Butanes also experienced a significant increase year on year, with imports increasing to almost 2/3 to 76 million kilograms. Okay, so the second finding, we're looking at polyethylene. Polyethylene is an input to manufacture plastic products. These products include plastic. Some of the products are produced include plastic bags and bottles, medical devices, and automotive components. South Africa is generally a net importer. The largest share originated from Saudi Arabia in the second quarter of 2022, which was about a 47% share of total imports of polyethylene. This accounted for about half of, it has accounted for about half of imports over the years. The cause of the surge in the second quarter of 2024 was unclear. However, similar surges have occurred over the years. Looking at the third finding, which was maize. So maize is a food staple, with white maize accounting for half of maize that is produced, and it's mainly for human consumption. In contrast, yellow maize is mostly used as an animal feed. Maize is a summer crop with extreme weather conditions affecting production. Most imports into the country originated from Argentina, with South Africa being a net exporter of maize. South Africa occasionally imports maize, and when the country imports maize, a surge occurs, as you can see in the yellow bars, red bars on the graph, as well as the blue line. Large import volumes are due to local supply disruptions. The surge in the second quarter of 2024 was due to yellow maize imports to Western Cape. High inland transport costs resulted in an increase in yellow maize prices. Imports from Argentina, in contrast, were cheaper. And Southern Africa has also experienced droughts, with South Africa being less affected. Looking at the fourth finding. Which is trade in fertilizer products. Fertilizers contain nutrients for plant growth, which is used to grow maize, a crop, sugarcane, and as well as other crops. South Africa is a net importer of fertilizer. Potassium and most nitrogen inputs are imported into the country. Phosphate and nitrogen fertilizers are locally produced. The largest quantity surge was in ammonium sulfate due to imports from China. The second largest quantity surge was in potassium chloride due to imports from Russia. So sulfur of all kinds includes crude and unrefined sulfur, which is mostly used to produce sulfuric acid. Input into production of phosphoric acid. Input to produce phosphate, as well as non-phosphate fertilizers such as ammonium sulfate. South Africa is a net importer of sulfur. Sulfur imports surged due to import originating from the UAE, Oman, and Kuwait. There is no clear reason for the surge. It has been attributed to local and global conditions, with global fertilizer prices having risen. Production and trade was also impacted by the Russia-Ukraine war. China also imposed export quotas on fertilizers. Local crop planting season also drove demand, with rainfall in South Africa occurring in October when farmers are starting to plant crops. Production challenges also faced by EXO had an impact, with them being unable to meet local demand. So concluding with the trade analysis on cement, the production is estimated to be about 13 metric tons, which is below the capacity of 20 metric tons. South Africa imports Portland cement and occasionally imports cement clinkers. Cement was 100% designated in 2021. Imports have declined but varied since. There have been changes in trade sources. So Pakistan was the main trade source from 2010 to 2014. Anti-dumping duties were imposed in 2015, and then there was a sunset review in 2021, and then the duties were kept. So from 2015 to 2018, China was the main import source. And then from the second quarter of 2018, Vietnam was the main import source. And in the second quarter of 2022, it supplied about half of cement imports into the country. That concludes my presentation. Thank you.
Thank you very much for your question, Lucas, for your presentation, excuse me. Do we have any questions from the rest of the room? Let me just see. Okay, I will take the silence as indicating no questions at the moment. Thanks, Lucas. You can stop sharing your presentation so that we can move to the next one, which will be the export tracker. Again, colleagues, please remember, let's try to stick to 10 minutes so that we can leave time for that one clarity-seeking question. Otherwise, we can then go to that Q&A at the end of the presentations. Thank you.
Good afternoon, colleagues. My name is Diako Mofo. I'm a senior economist from TIPS. I'm going to present the export tracker. So I'm going to present the export tracker. I apologize for us. It's going to be the Q1 export tracker. By way of introduction, the export tracker's objective is to provide a baseline of monitoring and tracking South Africa's export performance, highlighting key changes in the export patterns on quarterly basis. So its aim is to provide up-to-date, accurate data on exports. Without wasting time, let me move on to the overview of the performance of our exports in South Africa. This you have already seen from the past two presentations that in the first quarter of 2024, our merchandise exports experienced a decline of 7.8% on annual basis, amounting to 470 billion, and declined by 10% from the previous quarter. So this decline in exports was driven by reduced demand in key markets such as Asia, North America, and the Middle East. So imports also declined by 10% on year basis. Overall, South Africa's trade balance had improved in the first quarter from a deficit of 1 billion in the first quarter of 2023 to a surplus of 12 billion in the first quarter of 2024. So looking at the composition of the South African top 20 export sectors, in the first quarter of 2024, ores, precious stones, vehicles, mineral fuels, and iron and steel remain the top 5 products in the South African export bucket, accounting for 61% of the total export value. So of the top 20 exports, fruit and nuts, vehicles, and beverages experienced the largest annual growth, with fruit and nuts increasing by 31% due to an increased demand in India and the US. The vehicles experienced the second largest annual growth, increasing by 24.8%, while beverages also increased substantially by 20.8%. Looking at South Africa's top export markets, in the first quarter of 2024, China continued to be South Africa's top export market, accounting for 11.8% of the total export value. This was despite a reduction from 56 billion rands in the first quarter of 2023, amounting to 55 billion rands in the first quarter of 2024. So in the first quarter of 2024, the top 5 export products to China comprised of iron ores amounting to 68%, iron and steel at 14%, copper, wool, and wood pulp. So of the top 5 export products to China, ores experienced the highest growth, increasing by 10%, and pulp, on the other hand, saw a significant decline of 69%, followed by iron ore at 14%. Looking at South Africa's, or the other top markets, in the second place, the exports went to the US, accounting for 7.8% of the total exports, and the top 5 products, export products in the quarter under review, which is the first quarter, were precious stones, vehicles, iron and steel, ores, and aluminium. And in the our third export market is Mozambique. So I need to highlight this, that it is important to note that significant exports to Mozambique, which according to data retained its position as South Africa's 3rd largest export market. This standing is somehow flawed because significant share of exports to Mozambique tend to represent exports destined to other markets such as China. So most of the time you would find that most of the exports are just in transit through the Mozambican port. So exports to Mozambique accounted for 6.4% of the total exports, which was around 30.4 billion. So the exports to Mozambique increased from 5% to 6.4%, and this may be representing an increased exports through Mozambique instead of exports destined to Mozambique. Iron ores, iron and steel, mineral fuels, and products in the category of nuclear reactors, boilers, machinery, and mechanical appliances, as well as the vehicles, were the top 5 exports to Mozambique. So looking at the regional exports, at the regional level, Asia was the largest export market, accounting for 30% of total exports, valued at 143 billion in the first quarter of 2024. And Asia experienced an annual decline of 10%, and a 12% decrease on quarterly basis. Africa is the second largest export market, accounting for 28%, which amounts to 132 billion rands. And this annual growth of exports to Africa was 9%, and they declined by 10% from the quarter, the previous quarter, which was the fourth quarter of 2023. EU was the third largest region that South Africa is exporting to, with a share of exports to the region accounting for 23% of total exports, valued at 108 billion rands. The top 5 exports within the region comprise Mozambique, accounting for 23% of the total market share, followed by Botswana by 14.9%, Namibia by 11.5%, and Zimbabwe and Zambia. Of the top 5 markets, Mozambique experienced the highest annual growth of 24.2%, followed by Botswana, which grew by 14.5%. So the growth, as you will remember, of exports to Mozambique continues to be boosted by mineral exports, particularly ores, which pass through Mozambican port to other export markets such as China. Now we are looking at the product selection. So what we do, we look at 4 products, 2 products that had significant growth outside the mineral products, and we also look at those that experienced significant decline. So for this quarter, we looked for the significant growth. We looked at the growth of maize meal and the fresh pears. For the significant declines, we looked at propylene. And with propylene, you'll see as you look at our reports that in the fourth quarter of 2022, we analyzed propylene as a significant growth product, but since then it has been experiencing considerable declines. And then the decline that we also experienced was with the semi-finished products of iron and alloy. So this product was also interesting because South Africa has a policy on the semi-finished products. We need to look at semi-finished products in conjunction with South African government policy intervention to curb scrap metal theft and illegal export of scrap metals that sometimes are exported in disguise as semi-finished products. So I'm not going to go into details, but these are the 4 products that we analyzed. If there are any questions, then I'll delve deeper into that in Q&A session. Thank you.
Thanks, Diako. Any questions from the room before we move to the next presentation? No. Okay. FDI tracker team, please start with your presentation. I'm not sure who is presenting between Danae and Galelo.
My name is Galelo Mashiane, and I will be presenting the FDI tracker together with my colleague, Danae Govender. I'm just going to quickly run through our introduction and methodology. Methodology specifically because we collect data different to the other reports. Then I'll go into limitations. Danae will present the investment environment, and I will go through the project trends for the first half of 2024. So the FDI tracker was developed for the DTIC by TIPS as a quarterly monitoring tool. It is project focused and aims to support policymakers and other stakeholders understand the nature of the investment environment. And we aim to answer policy relevant questions such as why do companies invest, the concerns role government plays, as well as microdynamics such as locations and the types of investment. So in terms of our methodology, the FDI tracker is a dual analysis system. We use a tool named Dexter. It's online and it's been adapted to find relevant search terms such as foreign direct investment. And using the tool, it collects articles for us related to FDI. And thereafter, a TIPS researcher will then create a profile of a project based on the information found in the articles. It also uses other sources such as annual reports, company announcements, and it's meant to be complementary to existing methodologies, such as what's available from the Reserve Bank, what the Financial Mail avails, as well as who owns whom. It's just that those do have limitations, such as being behind paywalls and also existing surveys and samples, but these are only a select few. We aim for continuity in our monitoring. So this is just a brief breakdown of how it works and the role in the panel where it says FDI tracker, just how it all comes together and synthesizes, and the role of the TIPS researcher or our analysis, as well as how we maintain quality control. So we get the information from Dexter, TIPS researcher inputs that and creates a profile of the investment. Then quality control, we add information from sources such as SARB to give context to the environment in which investors operate. So I'm not going to go through the slide in the interest of time. So there are limitations to what the FDI tracker can accomplish. So we only report on projects that are publicly available. There is a sectoral bias where some sectors are more visible than others, simply because those companies report more, but also sectors such as manufacturing are more visible than, say, agriculture. And we report when the investment is announced, keeping in mind that capital investments occur over long periods of time. And we don't cover portfolio investment as well. And announced investments that don't materialize, we account for those by continuous tracking and removing them from our database. Danae is now going to go into the investment environment.
Well, thanks, Kelelo. So the analysis of the domestic investment environment seeks to provide insights into the general environment in which investments take place. The metrics analyzed indicate the extent to which pledged investments materialize and provide a glimpse into investor sentiment, which will ultimately have an impact on the future growth prospects of the economy. The first set of metrics considered is South Africa's quarterly inward investment. It is important to note here that we focus on the capital account, so financial derivatives are excluded from our calculation of total investment. That said, here we see that the market value of South Africa's total inward investment increased from a revised 6,488 billion in the first quarter of 2024 to 6,694 billion rand in the second quarter, thus representing a 3% increase. In terms of investment by type, direct investment increased from 2,031 billion in the first quarter to 2,131 billion in the second quarter of the year. Likewise, portfolio investment increased from 3,092 billion rand in quarter one to 3,258 billion rand in the second quarter of 2024. And this means both measures increased by around 5% between quarters. Conversely, other investment decreased by 4% from 1,365 billion rand in quarter one to 1,305 billion in quarter two. The second set of metrics examined include those related to gross fixed capital formation, or GFCF, which decreased by 1.4% in the second quarter of the year. In terms of GFCF by source, from the first to the second quarter of the year, both general government investment and investments by public corporations decreased by 1.5%. That's from 185 billion rand to 182 billion rand for general government investment, and from 121 billion rand to 120 billion rand for investment by public corporations. Over the same period, investments by private businesses also declined by 1.3%, from 784 billion to 774 billion rand in the second quarter. The next indicator considered is the Absa Purchasing Managers Index, or the PMI, which at the start of the second quarter of 2024 showed a marked improvement, increasing to 54 points in April from 49.2 points in March. But in contrast to the April figures, the PMI declined below the 50-point neutral mark in May 2024 to 43.8 points. By the end of the second quarter, the PMI remained in negative territory, despite increasing by 1.9 points to reach 45.7 points in June. And that gives us an average over the second quarter of 47.8 points, still below the 50-point neutral mark. The final metric considered in the FDI tracker for the investment environment section is the sub-leading composite indicator, which decreased by 2.4% in April 2024. Oh, apologies, it increased by 2.4% in April 2024, decreased by 1% in May 2024, with a further 0.4% decrease in June 2024. And despite the two consecutive months of decreases, we still see an overall increase over the quarter. So the main contributors to the April increase included an acceleration in the 6-month smooth growth rate in the job advertisement space, as well as an increase in the approval of residential building plans. On the flip side of the coin, the May decrease is attributed to reductions in job advertisements, as well as a decline in residential building plan approvals. And finally, the contributors to the further decrease in June included a narrowing of the interest rate spread and a decrease in the approval of residential building plans. All right, so that brings us to the end of the investment environment section. I hand back to Kelelo to present a breakdown of the FDI projects captured in the first half of the year. Thanks.
Thanks, Dene. Again, I'm just going to quickly go through the trends for the first half of the year. So 31 projects were captured. This amounted to 12.1 billion from 8 projects. The number of employment opportunities, there were 201 projects, and 32 projects were pre-existing projects were updated. There were serious limitations in information available on project values. So just briefly, foreign direct investment by industry and sector. Utilities recorded the highest value. This is overwhelmingly private investment in renewable energy generation and storage. The biggest project was the Red Sands project, 5.7 billion, which is under a government program, the Battery Energy Independent Power Producer Program. Then in terms of services, half of these were in storage and warehousing, and mining completely the investment in metal ore projects. Manufacturing is divided into automotives, basic metals, and petrol and other fuels from natural gas. When we look at FDI by type and stage, most investment was in early stage development in terms of stage, and this is looking at projects announced at exploration and feasibility. We also see that greenfield investment dominates, and we generally seeing new entrants in renewables such as Yellow Door, sun farming, and Energy Cal. Then when we look at investment by location over the first half, the Northern Cape drew the highest investment value, and this is under the Red Sands project. And then when we look at Limpopo, there are 2 PGM projects that contribute to the 2.5 billion investment there. There were 3 investors overall that didn't disclose the locations for their investments. This includes Heineken's glass recycling initiative. Then in KZN, we see the private-public partnership with the Zululand Energy Terminal and Services valued at 1.1 billion. Then in the Eastern Cape, most projects are in services, Western Cape utilities, Gauteng, again in services, and Northwest Utilities. Mpumalanga benefits from investment in utility services and Free State only services. When we look at investment by country of origin, in terms of region, Europe continues to dominate. 22 of the investments are captured over this period. Came from Europe, as did the entirety of the investment value. Investment from Europe is predominantly in services, followed by renewable energy, with the UK, Switzerland, and Germany contributing the most. Then, in addition to services, investment from Netherlands was directed towards manufacturing. By target market, most investors are looking at the outlook is on the domestic market. This is largely a result or an outcome of self-generation projects, mining projects. They're the ones that have a domestic, regional, and international outlook. Where investment that is domestic and regional includes data center development projects by Equinix and Microsoft. We have a matrix called the credibility grading. This is just for us to say what extent to which do we think an investment will materialize. And what we noted this over this period is that most of them we ranked as being likely to materialize. These are characterized by companies that are well established with a track record of investment. The sectors that they are targeting, such as ICT with the data centers and renewables for self-generation, those tend to have a high degree of projects that come to fruition, and those that are related to government programs, such as the Battery Energy Initiative and the Zululand Energy Terminal. Those are also generally most likely to materialize. We have a section called Barriers and Constraints that's just to say these are the challenges that investors are experiencing, and the only one that we identified over this period is the car powership projects that are facing issues around grid access, pricing, and legal challenges. Of the projects that we updated, most of them are renewable energy projects, which are a mix of private and public investment. We also noted projects that were announced at previous investment conferences that also materialized. Then just some insights from our monitoring over this time. We see growing investment in sustainable technologies for self-generation. We are also in the same space. We see new entrants that are targeting providing or supplying power to local businesses. Manufacturing, mining, utilities continue to attract investment. Europe maintains its position as a source of investment, and steady progression of projects that are materializing. Thank you very much.
Thank you, Kelelo and Danae, for that presentation. Any clarity-seeking questions in the room? Okay, I am not seeing any hands. Okay, Khopane. Sorry, I hope I'm pronouncing your name correctly.
No, that's correct. Thank you, Nukwanda. Oh, in terms of the origin or of the investments per country, I noted, just out of interest, I noted Bermuda. Would that be the source of the funds or of the investment funds per se, or would it mean that Bermuda investors specifically are also targeting South Africa as a place for their investments? It's just out of interest. Thank you.
Thanks, Khopane. Arena?
Hi, everyone. Thank you for the opportunity and thank you for the very interesting presentations thus far. So I'm new to the tracking presentations and I'm not sure if this has been shared before, but I'm a little bit more interested to hear about the data sets that the researchers are able to access. And yeah, is it something you're able to get from SARS? Is it something you're also able to get from other databases? I'm quite interested to hear. I also dropped the question in the chat if perhaps that's more clear. Thank you.
Thanks, Arina. Kelelo and Danae, do you want to maybe answer the first question and then we can take Arina's question during the bigger Q&A? Otherwise, you can also then respond in the chat, but I would rather we have that discussion at the end as well.
Hey, Knox, sure. I will take Kupani's question and we will address Arina's question at the end. So in terms of country of origin, with Bermuda there, it's about where the company that's investing is officially registered. So that project is by, I believe it's by Sylvania. It is... There are 2 mining projects. So their official registered address, that's why it reflects as Bermuda. But we do note that it is a territory of the United Kingdom. Yeah.
Thanks, Kelelo. Thanks, colleagues. So I will then move on to my presentation, which is the imports localization study. Those of you who are new to the presentation, so the imports localization study is essentially a spin-off of the import tracker. And so we use the same data that we receive from SARS in order to perform the analysis for this particular report. So the report for this current year is different from previous ones, as I said earlier. Those ones we did on a quarterly basis, and then beginning in this year, we've then moved the project to be on a biannual basis. And so this particular report is for the first 6 months of 2024. And then these are just the contents of the presentation. So briefly mention the trade analysis and then move on to the actual product analysis. So before I move on, in terms of the product analysis, really what we're trying to do here is look at products for which there are high imports, and then to try and figure out if there's any possibility for local manufacturing. And we do so by looking at factors such as the value of quarterly imports. And so the sort of minimum amount is 150,000 per quarter, which on a biannual basis would then be around 300 million, not 150,000, sorry, 150 million. And so for a biannual basis, it's around 300 million. And so then we look at factors like, is this product already designated locally? I know there's a sort of questions around the legal argument around localization and designation at this point, but we still use one of those, designation as one of the indicators. And then other areas that we look at, we try to see if there's any local production that is happening. So that's just a brief background of the intent and the sort of analysis of the project. So in terms of the trade analysis, so what we see is that the trade surplus increased to around almost 70 billion in the first half of 2024, but that is around 233 billion lower than the surplus in the first half of 2021, which was just after the height of the COVID pandemic. And we see that sort of first half of 2021 increase really being around the surge in mineral prices, which then would have contributed to the higher surplus at that particular point. And then in terms of imports, these also grew over this period, but the growth was mainly driven by an almost 10 billion rand increase in crude oil imports, as well as a 5 billion rand increase in auto components for passenger cars specifically. And as has been mentioned, the issue around crude oil is linked to refinery capacity. So you would be aware that around 2021, there were a spate of fires. I think one of them affected NAPREF. I can't remember where the other one was, but that resulted in a loss of refinery capacity. And so what we saw after that period was an increase in some of the sort of final petroleum products like petrol, for example. There was an increase in the imports of those. There was also an increase in imports of diesel, as you will see. It also then impacted some of the sort of countries of origin for our major imports. This particular slide speaks to the top 10 import sources for the first half of the year. So that's between 2013 and 2024. And as has been mentioned in previous presentations, China is the main source of imports for South Africa. This is followed by Germany. And then because of the increase in diesel imports, we also then see the entry of India into South Africa's top 10 import sources for the first half of the year. We also then see the entry of Oman as into the top 10. And the reason for this is that both these countries were sort of the major sources of diesel imports over that period. And you can see sort of how it tracks with, for example, the COVID pandemic, but also in terms of the impact of load shedding, where we start to see that surge, particularly around 2021. That growth in the imports of those particular products, including diesel. And then as the refinery capacity has improved, we've seen a decrease in imports of products such as diesel, as well as petrol, because now we have the sort of improvement in refinery capacity, and so we're producing the stuff locally. And then in terms of the product analysis, so one of the products that we looked at is photovoltaic cells, which are assembled into modules or made up into panels. And so as you're aware, these are for the renewable energy industry. And although solar panels as combined products or other renewable products are not necessarily designated, the PV components are designated at around 70%. And then in the first half of the year, about 5 million units were imported. That is, however, down from 45 million units in 2023. All of these products are imported from China, and the value essentially then tracks the decline in the volumes imported as well, which falls to around 2.2 billion. And as you are all aware, the overall growth in renewable energy products demand was in part driven by the uptake in renewable energy products through the REIPPP project, as well as then attempts to sort of speed up uptake of renewables in response to the load shedding crisis that we had, particularly beginning in 2022 all the way to 2023. So part of the issue then became that so essentially there were local manufacturers of these particular products that went to ITEC and said, hey, we're struggling with some of the competition from countries such as China. And so we need to protect the local industry, which is then we see the introduction of a 10% ad valorem to imports of solar panels. And what happens then, as you will see, the gray line ends at 2021. That is because you know, a new HS code is then introduced in order to implement that 10% duty on those particular products. And so the products are then split, where you see here it's made up into panels. This is split from a bigger HS code, which also included those particular products that were not already assembled into panels. There is some R&D happening for this product in the country, including by universities as well as institutions such as CSIR. Then moving on to the next product, this is steering wheels and steering columns used for the automotive industry. And so it covers it essentially covers these products for passenger vehicles all the way to special purpose vehicles. Once again, we see that imports grew to about 112 million in the first half. This is from around 740 million in the first half of 2023. There was a slight decline in the volumes from around almost 3 million kilograms to about 2.6 million kilograms over the same period. But although there are local manufacturers of, you know, auto components in the country, including steering wheels and steering columns, we generally trade at a deficit, with Germany and the US accounting for the bulk of the imports we get into the country. As I said earlier, you know, we obviously manufacture these products, but we do trade at a deficit, and hence the amount of imports. And we would then also know that these particular products are not designated, but, you know, as you see, there are high imports. And then the next product is for artificial joints for orthopedic purposes, and these are medical devices or essentially prosthetic devices, excuse me, that are used to treat medical conditions related to joints and restricted motion, so arthritis and you know, sort of hip replacement and such. We also then know that South Africa generally has a small medical goods, medical devices industry, although there is some local production. For this particular good, we trade as a net importer, with the bulk of the products coming from the US, Switzerland, and Ireland. And again, as I said, there is some local production, and there's also some R&D happening, including from the Walter Sisulu University. But this product is not designated for one, but then again, we do have a relatively small industry, which also then employs a smaller number of people compared to other industries. So that comes to around, I believe, 5,000 people across the different manufacturers. So yeah, as you can see, we included this particular product, obviously, as it is a high value product with generally high volumes that are traded. And then the second last product that we looked at is combined harvester threshers, which is a agricultural machine that's used for harvesting crops like rice and wheat, soybeans, and other crops. So globally, Germany, the US, Belgium, and countries such as China dominate global trade, so imports and exports. And although South Africa has a history of, you know, producing some of the best or some great capital goods equipment for the mining industry particularly, this particular good is not manufactured locally, and again, it is not a designated product for local manufacturing. And then South Africa is a net importer of this particular product. Most of the imports come from Germany. The part of the challenge for localization here is that this is generally a low volume and high value product. And so for local manufacturing, it then has implications, especially around the intensity of the employment that can be created from localization of this particular product. And then the last product that we looked at is gears and other gearing machinery. This is then for, components that are used in manufacturing and assembly. It's one of those particular capital goods that go into various machinery depending on, the use of that machinery. And again, it is used in different industries. So it can be used in automotives, for example. It can also be used in clothing and textiles. There are different variations of this particular product. And so whatever is purchased also then depends on the need of that particular industry or that particular company that's importing these gears. These do not include those gears used for vehicles. It's just for machinery. There is some local production, but the extent of production capacity is unclear. We do try to get that information, but sometimes companies are wary of sharing what they view to be private information, and so we're not always able to answer that particular question. And so import volumes declined. You can see that line there since 2013. It's consistently gone down. The main source of the imports is China, which notably accounted for half of the volumes in the first half of 2024, but accounted for around 21% of the value. In contrast, the US, which accounted for around 4% of volumes, accounted for almost a quarter of the actual value. And so this could really reflect one of two things: either imports from the US are generally expensive compared to imports that are coming in from China, hence the sort of mismatch around the value and the volumes that are imported. Or it could just be that, the kinds of gears that are imported from the different countries are different in terms of the use, but also different in terms of the size. Whereas, so assuming here, for example, that the kinds of gears that are coming in from China might be slightly smaller and used in smaller machinery compared to what's coming in from the US. So we're not necessarily clear on sort of the breakdown of those particular goods, but I'm making this particular point to say that it is important to note some of the big discrepancies in the volumes imported and the actual value of those particular imports. That is the end of my presentation. So I think we can now move on to question and answer. The questions here do not necessarily need to be about this particular presentation. I think we can speak to questions about the other presentations as well. Before I open up the rest of the room, perhaps Galelo, you would like to take a stab and answer the question from Arena, and then once other colleagues have then asked their questions, I think each of the presenters, as they respond, can also respond to the issues of data for their particular reports that they do. Thank you.
Hi, Arena. So in response to your question, let me first start with the data that is available. So, for example, the Reserve Bank, they publish a quarterly report on the investment position, and that comprises FDI data, which Dene also spoke to in his section. Then organizations such as the OECD, UNCTAD also publish FDI data based on what they get from the Reserve Bank. Then in terms of SARS, SARS does collect administrative data, and there is a project called the Seutame project, which is a partnership between the South African government, local institutions, as well as UNU-WIDER, and it's a project that uses this administrative data to produce research on the South African economy. And there have been some reports based on that data that they've used on FDI. But the extent to which it is publicly available, that is what I'm not sure of. I do know that you would have to go through training and request it from Seutame. I hope that answers your question.
Thanks, girls. Any other questions from the room? So while we wait for questions from the imports localization and import tracker perspective, that data we get on a monthly basis from SARS. And then depending on the kinds of analysis that we run, the sort of SARS database is a difficult one to use over a longer period, because what they publish, they have all of the information, but you can only set it up for 2 years at a time. And so we use Quantec to get the values over longer period of time of that data, but then Quantec has other limitations in terms of they don't publish the volumes for imports, and so then we use Trademap to get those volumes. That applies to the import tracker as well as the import localization study. The rest of the information is really just doing research. So in terms of finding out who the producers are, if there are any local producers, and some of that information. Yeah, I think that covers that particular point from the imports perspective. I am still not seeing any hands unless I'm missing people. I think if there's someone whose hand is up that I'm missing, then please feel free to unmute yourself. But perhaps in the meantime, we can then have Diako and then Seutame answer the question as well around some of the data issues. Thanks.
No, thanks, Knox. With regards to the export tracker, we get most of our data from SARS monthly information, as well as Trademap. So we rely mostly on Trademap for our export tracker and export data for long-term periods, for both values and volumes. Thank you.
Seutame?
Yeah, so for the REB, so there are several data sources that we use. But mainly the REB, or the Real Economy Bulletin, is based on on the date or the day of releasing the GDP, so which is released from Stats SA. So most of the data comes from Stats SA, from Quantec, as well as, for example, in terms of trade data. Mostly, again, Stats SA to some extent. I'm just trying to quickly reflect here, but I think Stats SA is the most data source, as well as the South African Revenue Services for the trade data.
Thanks, Seutame. Once again, opening up space to the rest of the room for questions or inputs or anything that you think might be useful to add to any of the reports that have been presented?
Thanks, Nokwanda. It's Seutame again. It's also on the matter of data specific to the FDI tracker. I assume that the SARB, the SARB will not go down to a provincial level, but you were able to present to us some investment in what investment that was disaggregated. So I take it that in terms of the methodologies that was outlined, your Dexter and so forth, this is how you're able to disaggregate the data and identify projects to that level, which you were able to at a provincial level. I just assume that is how you complement then the limitations that goes with SARB data, which is really very much aggregated data in terms of value and volumes of inward investment. Thanks. I couldn't find the hand pickup thing again this time.
Yeah, I don't think any of us know where it is. Thanks, Seutame. Kels, Danae, do you wanna take that?
Sure. Seutame, you are correct. Because you're very correct. It's because of our methodology. We use what's available publicly. We don't just take it at face value as well, where one article contains say information on a project. We thereafter, once we've identified a project, do further research to fill about 20 variables that we collect across the database.
Thanks, Galelo. So I'm not seeing any other hands. I will take it that everyone in the room is satisfied to close the session. Andrew, are you able to unmute yourself and speak? I would like to hand over to you to close the session as the representative of the DTIC.
Thank you, Nokwanda. Thank you for the great work and the team, the tips team and the colleagues who have attended. I think that our attendance has reached is peaked, and really great work done really advertising this event. Let's say that the importance of this program is that when you look to import, you see you can identify easily existing markets and product related to it. And as policy developers, it's very important to link the two, so see which should be the product of focus. In export, you can see some footprint of South African products out there. And that can help to direct mostly SMEs where they should put their strength to really penetrate export market. I believe that this is not a waste of time. It's very important that we attend. And I'd like to thank the colleagues who have attended. And the tips, keep up with the good work. Congratulations. And we hope that it will be more regular on quarterly basis. Much appreciated. Thank you so much.
Thank you, Andrew. Colleagues, thank you for lending us your ears. The session is now done. Can I please ask that the tips colleagues stay behind, but everyone else, thank you for your time and please feel free to leave the meeting. Thank you.